Hey everybody, and welcome back to another video. This is How to Invest. Spencer here, and this one is going to be a new stock. So this one's going to be on CRISPR Therapeutics, ticker symbol CRSP. This is a gene editing company. If we go over, this is their homepage, their website. If you look up CRISPR Therapeutics, this is what will pop up. So the first thing, you go to gene editing, and they have the details of what they are doing. So we'll get right into it. So CRISPR is a specific and efficient and versatile gene editing technology we can harness to modify, delete, or correct precise regions of our DNA. So Dr. Emmanuel Charpentier, one of the scientific founders, co-invented CRISPR Cas9 gene editing. Until then, people knew CRISPR only as an acronym for clustered, regularly interspaced, short, palindromic repeats of genetic information that some bacterial species use as part of antiviral mechanism. Now, as a gene editing tool, CRISPR/Cas9 has revolutionized biomedical research and may be able to enable medical breakthroughs in a few biological innovations have before. So edits genes by precisely cutting DNA and letting natural DNA repair processes take over time. The system consists of two parts, the Cas9 enzyme and a guide RNA. If you want to go on and further research some of this company, but that's a general overview of what this company is doing currently and what they will look to achieve in the future with some of their goals that they are setting. So if you go over here, they have the therapeutic approach. If we go to programs, some of the projects that they're currently working on now. So they have one on hemoglobinopathies, and this is a little bit out of my expertise. I'm not an expert on biomedical, but I do know some people that do have their doctorates in this field and do believe in this company in the long term, but they also have immuno-oncology, which is a great research and very lucrative field, regenerative medicine, and in vivo. So the pipeline is kind of their biggest projects right now and what they're really trying to push to investors due to they do have earnings coming up, I believe, within the next week or so. But it just gives what they have in the works and what they're hoping to come out with soon. So, like I said, the hemoglobinopathies, and it just looks like they're trying to give a kind of a visual representation of their process so far. So they made it to clinical on the first one, clinical on the oncology. They've made it to IND enabling for the regenerative medicine, and then in vivo, they are researching glycogen storage, which is a disease, GSD, DMD, another disease, myotonic dystrophy, and cystic fibrosis. So very, very difficult diseases that have been around for a while. They're looking to cure due to gene editing, which could be a very lucrative field for them if they do succeed. If we look at the stock today, it is currently at $7.3 billion and just under $100 per share on the stock price, $96.70. We made a good upward move today with the rest of the market, as the market was up almost, I think all three indices. If we scroll up, we should see it. Yeah, the Russell is up today. So all four indices were up quite nicely, except for the Dow Jones is only up about 0.2, but everyone else was up almost half a percent or more. But if we go down, looking at some of the stats that I wanted to show and really emphasize here. So currently they have a trailing PE, but not a forward PE. So this can be kind of confusing to a new investor, and what this means is that currently looking out to the future, they are not projected to have earnings on the bottom line. So that is why they're unable to come up with a ratio. But in the past, they did have earnings due to an unexpectedly high amount of revenue that they were able to incur. So if we look down at the most recent quarterly results, we can kind of see why this happened. Their price to sales is quite high. Typically anything above a 2 I would consider quite high for a stock. And their price to book isn't really applicable. I would really only consider price to book for bank stocks or anything in the financial field. Doesn't really accurately measure like how cheap a stock can be. As long as the price to earnings isn't always a direct measure of how cheap or expensive the stock is. It does have a lot of flaws itself due to a lot of people looking past the amount of growth that the company is looking to have over time. And this company has phenomenal growth if we look just from the last quarter. So they grew year over year revenue growth by 2 million %. Yep, that's not a typo. So they took in just over $900 million for a quarter. If we extrapolate that out for a year, it'd be $3.6 billion for a company that's worth $7.2 billion, which from a price to revenue standpoint, or I guess price to sales, that would be about a 2. So it would be pretty cheap for a growth company as fast as they are growing. And if we look at their margins are phenomenal. Just about 50%. Typically anything above 20% is considered very, very lucrative and substantial for a company. And that's when a lot of companies are considered to have like a tech-like margin because a lot of tech companies or SaaS, software as a service companies, are able to have huge amounts of margin just because it's a lot of low labor costs, and it's really just they just have to engineer and come up with the software for the service, and then they just take care of maintenance and updates as it goes along. There's very little cost in making those companies, but this is almost, well, it's more than double typical SaaS companies. Like I said, software as a service. So a lot of these companies are valued at much, much higher multiples because of their margins. And this company has gotten just absolutely battered. We'll take a look at the chart later on and look at some of the technicals, but it hasn't really been treated too much like a tech company. It's really been just hammered over the past really 6 months since February. If we look, they did not make a profit. So their profit was negative $266 million from the past quarter, even though they did make almost $1 billion. And this is just because their revenue isn't really substantial for their goals yet. So they have a lot of products in the pipeline, like I showed earlier, and that they're working on, and they haven't really monetized almost any of these yet. And this is where most of the revenue in their future will be coming from, is from the cures from these diseases, and then the cost of what it will take for patients to get that fixed. But you saw that there's so many left that they have to still cure, and they really don't have anything in the works or anything, really any reliable revenue without those cures. But one reason that I am still comfortable looking into this stock and investing it into the future, I have not started a position, just want to be transparent, but it's their phenomenal balance sheet. We can see here that they have over $2.5 billion on the balance sheet, and their debt is under $200 million, which is fantastic. Anytime you're able to pay off all of your debt and still have $2.5 billion left is insane. Anytime the ratio is over 1, I would consider that a very good balance sheet for an early stage growth company such as this one is. And the last thing I wanted to touch on for the stats, as I usually do, is just some of the shares. So currently, they still have a huge amount held by insiders within the company, just about 13%. Now, that doesn't sound like a lot, but typically when a company's been around in public for this long, as we'll see in the chart, and has made a move like this company has, typically most insiders will sell out because they've made such big gains because they started investing at the earliest point in the company, and it was within single digits, and this company is almost $100 currently. So they've made quite a good return in a pretty short period of time, and in most cases, most people would sell out. But this just proves that a lot of people within the company figure that they have very, very lofty goals, and that they truly believe that if they hold the lump sum of shares that they do now, then it will be a very, very good opportunity to hold over the long term and will be very profitable for them. And is also an incentive for them to work harder and really try and push the boundaries of what they're able to achieve. And then the other thing that is very bullish is the percent held by institutions. If you frequent my videos, you guys know that this is always a bullish number for me, just because this is the money that's going to move the stock, because institutions hold billions upon billions of dollars, and this company is only worth $7 billion. So if you invest another $7 billion, that's a set of the company, and it would go up substantially. And then this also implies, due to a low short percentage, that there is a high retail investor base in this company. You add up 12 plus 54 and 5, that's a pretty low number. And just by doing some deductive reasoning, you can conduct that a lot of individuals are invested in this stock and make up a lot of the rest of the numbers besides the float within the stock. So that's another bullish point, because in my opinion, I would say that most retail investors typically like to hodl or hold on for dear life and bag hold for longer than institutions. I think institutions typically like to trade more, and once they've made a good amount of profit and see downside in the stock, they could get out of it and even short it, which is never something that you want, but can cause good buying opportunities. But I think that the retail investors typically like to bag hold, and this causes a very good long-term investor base, causing the stock to really get a good bottom in within this past month. We can see here it's kind of flattened out, started in September in the 120 ranges, and then has really come down and really flattened around the 100 range. If we look at the full chart on the technicals, we can see that it is starting to break out, or attempt to, in my opinion. So if we look here, just within the past week, we've had some consolidation right around the 100 range, like I was saying. We can see here on the 13th that we did break below this support line that we had on 511, and that was a very weak time in the market. So that was the thing that caught my eye. I was looking through a lot of stocks, as I typically like to do, and I was looking at the technicals, and I was very caught off guard because this is a very coveted stock among the stock market, and I saw that it was below May lows. And for most stocks in the stock market, if you typically follow the charts a lot, that hasn't happened. I think that probably about 50 to 75% of the stocks in the stock market never even came within like 5 to 10% of the May lows in October to September, or September to October. So that was one thing that really caught my eye, just because I saw that as a really good buying opportunity, just because I don't really think that a lot of the selling is warranted. If we go back, this is also a price that we saw almost a year ago. If we go all the way over a year ago, so we go back to 10/7/2020, the close was $97, and we closed today just at $96.70, and after hours we're running into the 97s again. So in my technical analysis opinion, I know I didn't draw any lines on here or kind of try and visualize for you guys what I'm seeing, but I saw a good support right around the 100 range. We did break it briefly, But if we see here, if we look at the the low here was also 95, so we broke 100 here. 100 is just an arbitrary number, but we did see a very good support or double bottom forming right around here, and good consolidation from there. So from here, it looks like it's starting to make a bounce. If we start to zoom in and look at some of the moving averages, today it looks like we're starting to approach that 5-day moving average and the 10-day. And if we move above there, that is another bullish point to add into the stock's breakout after the consolidation and the double bottom. But that was really all the technical analysis I wanted to put on. I have not started a position, like I said earlier, but if the stock continues to look like it's going to break out, I will go back. It does have quite a bit of upside. So it went over $200 up in, this stock actually peaked up in January before most of the market. Most of the market peaked up in February, right around here. February 18th, I think was the date. But this stock peaked actually in January and was up over $200. So I don't know if it would be going that high quite this soon, but I do believe that it is worth quite a bit more, maybe even in the 120 to around 130, 135 range would be more accurate. Maybe see some consolidation just because we did have such a substantial run within the past year and a half. Back at the March lows from 2020, this stock was in almost the 20s. So it was almost a $29 stock and has over tripled since then, which is a very, very good gain in the stock market. So I would not be surprised to see some consolidation, but I do believe that this is a good buying opportunity for a long-term hold due to just the lofty goals that they're looking to achieve and the field that they're in. I'm not in the gene editing field, and this would be my first exposure and was another reason why I am looking into the stock. So if you are looking into the gene editing field, definitely take a look at CRISPR Therapeutics. And if you made it this far into the video, thank you very much for watching and have a great day.